What's up, guys? Welcome back to DCA. So what we're going to do in today's video is dive into Chainlink. Now, I haven't looked at Link in a while, so what we're going to do is start by looking at Link from a risk perspective. We're going to look at the risk model for Link and kind of assess where we're at right now. Then we're going to dive into Link from the perspective of the broad holder base, and I'll show you what that means here in a minute. And finally, we're going to look at whale accumulation of Chainlink. Are whales right now accumulating, or as we've seen this big move to the upside in Link, are we seeing whales distributing? So we're going to dive into several different metrics here for Link and see what we might expect going forward. So what we have here is the risk model for Chainlink. And that is going to be in this color-coded gradient that you see here that ranges from these red colors all the way down to these blue colors. And what this indicates is how risky or advantageous it is to either enter or exit the market at any given time. So this is a machine learning model which helps you to identify when are the riskiest times to be holding the asset and when are the times where you should be looking to get into the asset, essentially. And what we can see is that when the price really gets into these overheated periods, right? Like we saw back here in 2021, like we actually saw recently when we got up to around 16, 17 bucks back here in the the end of 2023 and into the beginning of 2024. So the model was telling us back here when, if we just zoom in here a bit, the model was telling us when we were up at around 17 bucks, hey, the price has gone up too far, too fast. There's very likely going to be some profit taking. And indeed, from that point, when we reached 17 bucks, we saw the price actually head all the way down to $13. So the risk model nailed that level. And you'll notice that if you were using this risk model during the bear market, it told you that, right when we got to the bottom, right when we got down here to around $6, the model during this entire period was telling you, hey, this is a great time to be accumulating, right? So when we were at these higher prices, you can see the model was telling us, hey, it's still a risky time to hold Chainlink, right? Because based on what's happening in the market right now, it's very likely we're going to see a continued correction. But once we got down here to $6, hovering around $5 to $7 in that range, and quite frankly, we stayed there from June all the way until out here in September of 2023. And that's June of 2022, by the way. The model was telling you this is a pretty good time to be buying Chainlink. And it nailed the bottom and then it nailed the top on the way up. So it told us once we got up here to around, like we said, around 17 bucks, the model was telling us, hey, it's probably gone too far too fast. So then what happened? The model started to actually correct. So like I said, it goes from 5 to -5. And what you can see is that once we started to come back down, the price reset a bit, going from around 17 bucks down to 13 bucks. The risk model cooled off. It actually went negative. We went all the way down to -1.7. And remember, it's 5 to -5. So that's indicating when you're below that zero level, that's typically a good time to be buying the asset. And if you look at where we're at right now, even though the price has gone up, so we are sitting at, right around 19 bucks right now, the risk model is still sitting down here at around -1. So we have cooled off. Even though the price is higher, the model is telling you that because of the fact that we had this, month or two period where the price didn't continue rapidly rising. In fact, we had a pretty big correction. The model is telling you that this is still a point in time where Chainlink has a huge amount of upside to go from where we're at. Okay. So overall, this model absolutely nailed the bottom, and then it nailed this local top that we hit at around 17 bucks. We've had these, anyone who was going to sell probably did. Now we're ready to continue moving to the upside. So we have this model for Chainlink, Bitcoin, Ethereum, and around 40 to 50 other top altcoins. And we continue to build upon that. So the next thing I want to show you is this. Now on our site, polaritydigital.io, we've actually just released numerous on-chain metrics. And, a lot of sites only have on-chain metrics for maybe Bitcoin and Ethereum. We actually have a huge number of on-chain metrics for altcoins as well, which is pretty unique. And I'm going to show you how powerful these can be. So what we're looking at here is Link the price in orange, and then in green, what I have is the realized price. And if you're unfamiliar with what realized price is, I'm going to show you why this metric can be so powerful. So it shows you the average price of all holders on the network the last time the asset moved. Okay. So essentially, when we move an asset on the network, it's going to register the point at which that price occurred at, or where that movement occurred, what price it was. And this gives us a very good idea of how profitable or at loss a network is. And the reason this matters is because we find that when an asset drops below its realized price, that tends to be a very good indication that you are at or very close to a market cycle bottom. And in fact, if you are in a bear market, what we find is that that realized price tends to be a strong resistance level. Just like it tends to be, if you come down to it in a bull market, it tends to be a pretty strong support level. Now, I want to show you what happened. So you can see that if we recall back to, Chainlink's full price history, it just went parabolic pretty much, not quite right at the start, but all through that initial bear market, in its first market cycle. And we're talking 2018 up through 2020. It was massively in profit. So pretty much if you owned Chainlink, you were sitting on a huge profit. And if we just go back in time, you can see that pans out. The price was well above the realized price. Okay, so that means the average holder held the asset at a price much lower than where the current price was. All right. And what we see is, when did this kind of flip? This flipped right here, right here in May of 2022. And I don't think I need to remind anyone kind of what was going down around May of 2022. So we saw the price actually fall below the realized price for Chainlink. And that means that the network on aggregate was actually at a loss. And, you can see that Chainlink was way above its realized price. I mean, we're talking a realized price of $7 and the link price was $43. So there was just a huge spread between the average invested dollar and the market price of Chainlink. But that all came to pass back here in the middle of 2022. And then I want to show you what happened that, just shows the power of this metric. Notice where our price got to repeatedly and then followed by getting rejected at that level. Every time we got back to the realized price, like here in August, like here in November of 2022, then again here in April of 2023, then again, July of 2023, every time we got back to the realized price, instant rejection off of that level. Then what happened? We even got back to it again in September. We got back again in October and we broke above. That is a strong indication that you are making your way into the next bull run. When you break above this realized price historically and across different assets, what we see is that the realized price is an indication that you are either at or near the bottom when you get below it. And then when you come back up to it, while you're in a bear market, you tend to see a rejection at that level. When you get above it, then, like we did back here in October of 2023, that is a strong indication that you are heading into a bull market. So if you would have just been, kind of timing this out, you could have, let's say you didn't buy a single bit of Chainlink all through the bear market. If you just waited until you kind of got above this realized price and then had a confirmation above it, you would have been at around $8, okay? $8.50 or so. So this metric, I think, is excellent for kind of gauging where you're at with relation to a market cycle. Now, the last thing I want to show you guys is this, and this is another metric that we offer on the site. We offer a huge number of metrics. I just happen to be showing you a couple of them in this video. So there's just a huge wealth of information that you can gather by using Onchain Metrics. Now, the reason you don't see a lot of people using them is because of the fact that they don't exist in the equities market. Right? These are truly a behind the scenes look at what's going on in any given network that, like I always say, it's kind of like having a cheat code, because you can see how are things happening behind the scenes? You can't do that in the equities market. And so a lot of people who discuss these assets don't have any experience with them. And so they're kind of intimidated by using them, or they just kind of, brush them aside and say that, they're meaningless. But I think I've pretty well demonstrated that on-chain metrics, and, when I say demonstrated, I don't mean just in this video. I mean, for the last 2 years or so, I've been showing you time and time again how powerful and predictive on-chain metrics can be. So what we're going to look at now is actually whale accumulation of Chainlink. Okay, so what we have in blue is the price of Chainlink. What we're looking at in yellow is the top 200 wallets that hold Chainlink, but we're excluding the Chainlink Foundation tokens because, we don't really care about them. I want to know how many Link tokens are those wallets holding. And what we can see is that if you go back here to, we're looking at 2021 right now. Remember, we're looking at non-exchange wallets. So we're looking at the top 200 non-exchange wallets. You can see that these wallets were continuing to accumulate Chainlink. And where did they really dump the first time, right? And we saw the first big dump come around back here at our price peak. We saw them go from holding around 80 million Link tokens all the way down to around 60 million, 65 million or so. All right. And that came with a corresponding rapid decrease in the price. We saw them start to accumulate again, right? They accumulated all through the end of 2021 and then into the beginning of 2022. Then we saw them dump yet again. So the Chainlink tokens in the top 200 non-exchange wallets, also excluding Chainlink Foundation, went from around 90 mil all the way down to around 45 million. So a 50% decrease. Then we saw this value kind of oscillate up and down, up and down. But what happened here in September of 2023? And remember, if we just go back here real quick, if we recall, right, in September, the risk model was telling you, hey, this is a great time to be accumulating Chainlink. But what happened at that time? We actually saw the number of Link in these top 200 wallets, excluding the Chainlink Foundation. We saw these go from around 56 million up all the way up to 127 million. Okay. So we have seen a massive, and if you look here, look at the number of Chainlink in these whale wallets. Compare that to any time in the past. They actually hold a larger percentage of the supply right now than they have at any point in the past, and they continue to accumulate. We've seen numerous large accumulation blocks of Chainlink now. So we saw an accumulation block here in September, then again here in October, again in December, and then finally we've seen another one in January. So these larger non-Chainlink Foundation wallets continue to accumulate, all right? It's not surprising then that while we're watching these whales accumulate Chainlink in unprecedented quantities, it's not surprising that we've seen the price go from around $6 all the way up to around $19 right now. So I think things look really good for Chainlink right now. This is why, as you know, if you've watched my channel, based on the fundamentals alone, I think the upside for Chainlink is absolutely enormous. From top to bottom, it's one of the most foundationally sound assets in all of the crypto market. From that perspective alone, this is a great asset to hold, in my opinion. When you then dive in to the numbers, when you look at it, whether you're looking at it from a risk perspective, whether you're looking at it from the realized price perspective, so the aggregate holder, or whether you're looking at it from this perspective where we're watching whales accumulate this asset in unprecedented amounts, right? Now holding around 21% of the supply, a higher percentage of the circulating supply than they've ever held before. Everything is looking up for Chainlink, and I believe this asset has a huge amount of upside from here. So that's going to be it for this one, guys. Until next time, as usual, see you.